Let's look at the calculation for accounts measured at the average rate. Elimination entries are created based upon transaction totals for that accounting period for each intercompany GL account that is measured at the average rate, which will be accounts on your income statement. They are created for each elimination entity, and note they are not auto-reversed, which differs to accounts measured at the current rate. In other words, each balance is fully eliminated in the period in which it is established, which means there are no balances carried forward. Let's take a look at an example. So in this example, we are looking at accounts measured at the average rate for our UK entity. Notice our UK entity has a functional currency of GBP, and the parent entity that we are rolling up to in this case also has a functional currency of GBP. What does that mean? Well, when we are carrying forward account balances in GBP, the consolidated exchange rate will be 1. So our consolidated balance to eliminate will be the same amount in our UK entity. What that means is we will have occasions when we are eliminating certain transactions in NetSuite where no CTA elimination balance is generated. You might recall that the CTA elimination balance is the delta to ensure that the journal entry will balance. In this case, the CTA elimination amount is 0 because the journal entry balances because we are debiting and crediting the same value in GBP. One other thing to note is that accounts measured at the average rate and the historical rate are actually combined into a single elimination entry because they are both treated in the same way for elimination purposes, where we reference the balances generated in a specific accounting period and then eliminated in that same accounting period. Let's jump into NetSuite to take a look at a specific example. So here we have that exact example we were just looking at. We have the debit and credit of 1 million GBP, and the other balances reference the historical accounts, and we'll take a look at those shortly.